Okay, I think I have the recording going. There we go. Yep. All right. Recording. It is recording. Yes, this will be a recorded version that I will be posting in the members area, and then you can watch this again for, if I go too fast in certain areas and you want to just kind of refresh your memory here. So, we're going to start with Forex. I'm not going to talk about Bitcoin right now. I'm going to talk about Bitcoin in the next update. I'm going to separate these two videos and these two recordings. So the first discussion here is going to be on what we can expect immediately when the market opens. Sometimes we get an opportunity right away. Sometimes we don't. Sometimes I've got to wait until later in the New York session. Sometimes Monday creates a situation that price would just end up moving sideways inside a consolidation, and then I have to wait until like Tuesday or late Monday Eastern time, and then Tuesday Asian session when that starts before I actually get a signal. It just depends. Every week, every day, every Monday is different, but typically, very often with Mondays, I don't get too many trade signals. So just to keep that in mind based on the way I trade it. Now, I know that there are other systems that might give you some really reliable trading opportunities on Monday, but the way that I do it, that's just what ends up happening with the techniques that I use. So Monday is a bank holiday. It's still Sunday here in the United States. It's almost 4:30 p.m. New York time. So I'm in California, so it's 1:30 in the afternoon, and the market's going to open up, in what, maybe 27 minutes or so, 30 something minutes, 37 minutes. And because it opens up at 2 o'clock California time for me is when the first, usually with most brokers. So I'm just giving you a general idea of what I'm looking at and why it might take me a little while longer. I've noticed that a few brokers pick up a little bit earlier, but anyway, and some of them actually wait an extra hour after that. But basically, it's 5 o'clock New York time when things sort of become active and the brokers, MetaTrader brokers or servers are reactivated again. And we're going to analyze everything that we have up to this point. So we're going to start off with the euro dollar. Euro dollar, I'm not going to go necessarily backwards into last week's trading session, the entire week, and look at all the possibilities. You might remember if you're watching the update videos and some of the videos that I'm posting on the in the membership area, we've had a couple of continuation breakout trades with this one, and then we had the continuation breakout trade on Friday. Something that I do want to point out, and this has been happening quite a bit. This is the second time in about a week or so. This happened on Friday, and then there was another trade that it was a continuation breakout trade. We traded on the 1 hour time frame, and price stopped right at the take profit level, the 55 pip take profit level. And the reason that I'm bringing this up is not, of course, to show that I was just so deadly accurate at pinpointing this exact bottom or where it stopped. That's not what I'm talking about, because that's not what it is. I'm no genius. All I did was spent the time to research daily average trading ranges. And I'm going to repeat this a lot. As often as you continue to trade with me, you'll hear me talk about the continuation breakout trade. And the reason that I repeat that a lot is because in the heat of the moment, when you're executing a continuation breakout trade, I don't want you to hold on to the trade too long. Even though it looks extremely tempting and you're seeing price approach the 55 pip take profit level and you're thinking, there's a great economic news report earlier or an hour or two before that, and it's moving quickly. And there's the temptation to change things, meaning that it's approaching your 55 pip take profit level and you're thinking, it'll easily go for another 10, 15, maybe even 20 pips. And I want that, right? That's what you're thinking. I thought that. And what would happen is it didn't always go how far I thought it looked like it could go. What it would do is do exactly what it did here. On the euro dollar, it would go straight to that 55 pip take profit target and then stop sometimes. And that was it. That was as far as it went. Yet I was hoping and thinking that I could squeeze out maybe another 10 or 15 pips. Now I'm trading standard lots, so that could be a substantial amount of money if you continue to do that and it works. But going back to how I developed this technique, I designed the entry, I calculated the entry based on how far price could continue to go after a breakout using daily average trading ranges, meaning that I couldn't expect. So when I see a breakout like this, I say to myself, well, how much further could I really expect it to go? Like if this would have happened maybe an hour before the market closed, then maybe I wouldn't have expected it to go very far, right? I would have scaled out at the first 20 to 25 pips, which is what I do with a continuation breakout trade if I'm not too sure if it's going to hit the 55 pip take profit. Now, when I am not too sure, I talk about that in the membership area. So watch those videos, and I also talked about it last week. I did a whole presentation on it. But that's what I'm getting at, is that if there is a system that you're either taught or a system that you develop, and you know where the take profit target is, but then in the heat of the moment, you're in a trade and you think you want more, it may not go further. You have calculated that if you've done it correctly, if you've created the trading system correctly and you've identified the distance that it could potentially go. I know I'm repeating it, but it's really important because I let a lot of really good trades that I was up 55 pips on when I developed this method, when I first put it together. I let a lot of those roll back against me because I failed to lock in profits at that 55 pip take profit level. Each trade that I execute, each one according to my system, has a precise entry, stop loss, and take profit level. And if I change anything there, if I change any of those parameters, I'm going to get different results. Most likely, it's going to be a failed trade. So I was up 55 pips thinking, oh, what if I get 70 pips? And then it would stop, and then it would go all the way back, and I get stopped out. Just because I was being stubborn. So don't do that. It is true, though, as you can see here with some of these continuation breakout trades, that sometimes they continue and go a lot further than the 55 pip take profit level. That is also possible. And it is possible that you can trail it. I do say that. I say that, if you know how to trail a trade correctly, you could do that and get more out of it. However, again, this happens often enough right here where price goes straight to that take profit target, and that is it. And it turns around and goes back the other direction. Now, I expect that it will probably continue lower, but it could bounce and go back up and retest the level that it broke out of. That is a very common situation. It actually happened after it gave us the 3 pip entry on Friday with that continuation breakout trade. But I just want to give you that, start off with that rule in mind. You've got to remember that. Always, tell yourself that when you're grading your trade, that's something that I do and I teach my students to do. Grade your trades, which means grade your behavior. Not so much look for or write down, on a chalkboard or a, whiteboard or on a notepad or something like that you want to make 40 or 50 or 60 pips for the day. That's great. But if your trading system doesn't provide you that signal, those optimum signals, then you really don't have a trade available. But if you're insisting on making 40 or 50 pips that day, then what do? I was in that situation. And what I did was I started forcing trades. Meaning that I didn't have a proper signal according to my system on specific days, yet I still was determined to make 40 or 50 pips. So I just went ahead and executed a trade. I just jumped in when I thought I could identify how, that something was moving, and that wasn't a signal. It wasn't anything that I could really understand. Sometimes I wasn't confirming why the movement, and I would end up losing money. So the bottom line is it's better to grade and control your behavior according to your trading strategy, making sure that your entry is perfect, your stop loss, you honor it and you don't change it, and your take profit levels are honored and you take profits at those take profit levels and you don't change them if you have a valid proven system in place. That's the other challenge. Like I started off with that in mind back in 2001, but I still didn't have a profitable trading system developed yet. And I didn't know what to do. So then it was like those 3 concepts: perfect entry, honor the stop loss, take profits at the take profit level. Well, okay, I understood those concepts, but I still didn't have a trading system. So it was like, the chicken and egg thing. But you get my point. So here I have a valid proven system that I've been using since 2001, and all I have to do is duplicate that. I just need to repeat it and then make sure that my execution and everything is perfect and I grade my trades. So that's really what I want you to keep in mind, that if you're using these techniques, the ones that I'm teaching, the ones that I use, there are specific take profit levels. So you'll also notice that sometimes, And I talk about support and resistance, and I'll say that it's very often a pocket or a range of support and resistance. Sometimes there's multiple factors and, price swing highs from a while back, and you can go to a 4 hour, you can go to a daily, and things start to line up and they start making sense. But if you're just looking at a 1 hour time frame, here in this instance, you can see where it stopped on Friday was actually right around that level, that price swing high where we got that other continuation breakout trade last week. So anyway, that's the 1 hour time frame. At this point, I do think it will go lower, but it's not going to be another continuation breakout trade. We've already had one on Friday, and we already had it hit its 55 pip take profit level. So as far as looking for another continuation breakout trade, that would require another range of consolidation that I can box in. Again, I refer to it as boxing in a range of consolidation, meaning that I'm identifying a key high and low for support and resistance. I'll show you one on the yen crosses in just a moment. We're going to analyze those too, because there may be some continuation breakout trades there. Now, the 55 pip target is what I use when I execute the continuation breakout trade on the euro dollar, pound dollar, dollar Swiss, and dollar yen. I consider those the majors. I do use this strategy when I trade the dollar Canadian and the Australian dollar, but I don't trade the Australian dollar and the dollar Canadian all that much anymore. I did spend a great deal amount of time with it, but I'm really comfortable with the ones that I've sort of settled into, and I spend a lot of time trading Bitcoin, BTC USD right now on the MetaTrader platform. So, it keeps me busy. I mean, I don't mean any disrespect. I mean, I like the pairs, the Australian dollar and dollar Canadian. There's nothing wrong with them. When I do trade those two, I just use the continuation breakout trade. I don't like to use the HL30 on the Australian dollar and the dollar Canadian. They just don't give me the percentage of winning trades as I get when I trade the majors. So just keep that in mind, and that's why I avoid the HL30 altogether on the dollar Canadian and the Australian dollar. So on the open, again, we won't have a continuation breakout trade, and I really don't have a signal. It happens occasionally when the market closes on Friday that I have a continuation signal candle before the market closes, and I don't have the 3 pip entry. And then when the market opens on Sunday, for me anyway, it's Sunday, it gives me the 3 pip entry, and then I can continue to trade based on the signal that was set up on Friday. It happens, but it's not happening today. Now, we're going to take a look at the HL30 and the 30-minute time frames to see, because you see this trend move here. You can see what was going on here, and you can see why that would be a possible setup here on the euro dollar, possible HL30. It's bouncing off of a small support level. We'll take a look at those anyway. Let's just skip over, because right now we're just going to take a look at the 1 hour time frames. Let's skip to the pound dollar. This is the pound dollar. So there was a signal candle, but it was not confirmed on Friday below that price swing low here on the pound dollar 1 hour time frame. So at this point, I'm going to have to make an adjustment to my support level. I'm no longer looking at that. So if I put the crosshairs right here at that candle that closed below that support low right here, you'll notice that the CCI was pretty divergent, and the Bollinger Bands were separating away from each other, but it was kind of a mess. You could see what was going on here. So I stayed away from that. That's not a valid continuation signal candle. I do look at the Bollinger Bands first, and I want to see some solid, definite separation. I don't want it to look like maybe, or I'm staring at the top one, just kind of looking for that little hairline, indication that it might be pointing the opposite direction. It needs to clearly be separating away from each other. You know what I mean when you see it. It's that expansion move. So with the John Bollinger Bands, right? Bollinger Bands, when John Bollinger is explaining it, that's how I developed my continuation breakout trade. I was actually trying to trade the breakout with the Bollinger Bands. And I kept experiencing head fakes, and it was still confusing me, and I was just using the bands. And that forced me to start looking at highs and lows. And I kept telling myself, I need to figure out how to box in a range of consolidation. That made more sense to me. And I kept using that word, box in a range of consolidation. So here you can see this low right here. You see, some highs, and then it peaks right here. And then it goes and seems to hold right there. So at one point I had a high right here last week resistance point right there where my crosshair is, and then last week, the previous week's low. I remember talking about it in an update, and then we got the signal candle right here. So you can see what's happening here. The Bollinger Bands start to come together, and then on the expansion move, so here's the head fake, right? It starts to move out to the downside, and there's the expansion move. The Bollinger Bands are separating away from each other. And of course, I don't have all of the indicators that John Bollinger recommends. I think that there are some plugins or some additional indicators that you can add to MetaTrader to use the appropriate indicators. But right now I'm just using the CCI and the MACD. But that's what I did. That's how I took his indicator and then turned it into something that made more sense to me. So this to me would have been a head fake. I probably would have gone short here, or I would do something like that, even though I could see that there was a support low down here. But anyway, and he talks about how sometimes it will do this exactly. You get a breakout and it looks like it's going to go lower, or it looks like it's going to break out and it's a strong move, and then it reverses and goes the opposite direction. That happens. But the way that I was able to prevent getting into these weird head fakes, even though I was, I thought that at one point that the Bollinger Band was everything to me, right? That's how I thought I was going to build my entire trading system at first, was the Bollinger Bands. And I spent a lot of money buying a lot of his products and teaching, and I went to his 3-day seminar. And it made more sense to me when I identified key support and resistance levels and drew resistance levels and support levels. Just box in that range of consolidation. I could clearly see that. That made more sense. And then I waited. So you can see if I had a high here at that level there, and then I had a support low at the previous week's low, that's my range of consolidation. And that move right there that dropped out to the downside, that would not have been enough to justify going short. I would have needed for price to close and a candle to close below the previous week's low. In my opinion, that's the way I trade it. That's what I did, was created this continuation breakout trade. I was waiting for closed completed candles outside of the resistance. And then once that happens, then I look at the Bollinger Bands and I look for that sign of strength, that expansion move. You see clearly that on that green candle, the top Bollinger Bands are pointing almost straight up, and the bottom Bollinger Bands, there's no mistaking that is clearly pointing to the downside. These things, both of them, are separating away from each other. That's exactly what I'm talking about. As opposed to what you see over here, there was almost at that top Bollinger Band, it's kind of like where you look at it and go, I'm not too sure about that. The minute you say that, and I did this in the beginning of my trading career, the minute I would say, I'm not too sure about that, sometimes I would go ahead and do it anyway. But every time that I would do that, just about every time, it would turn out to be a failed trade. So the rule, or what you learn from doing that, is don't do it. The minute you doubt something, it is because you don't understand it. It doesn't make sense to you yet. That's the thing. And I would tell myself that all the time. I would say, I don't understand it right now, but I know that if I keep doing this is what I would say in my first year of trading. I know that if I keep doing this and I keep looking and I keep trying, eventually I'm going to have enough hours under my belt. I'm going to have enough time exposing myself to these scenarios and these situations and this behavior and the market reactions and all of that. All of that is going to accumulate into my ability to clearly read and detect what's going to happen next in most cases. I can't always, of course, nobody can 100% of the time, but you get my point. You get more and more and more experience with it. And when something didn't make sense to me and I went ahead and did it anyway just to see what would happen, that's when I would lose money. And if you're thinking that, just don't do it. Just don't. I mean, you know what I'm talking about if you've done it. And that is also another challenge. You've got to learn to just sit on your hands and walk away. You're going to get a better opportunity, because here's the way I look at it, and I know you look at it the same way. When I would go through that, and I would go ahead and do it anyway, even though I didn't know what I was looking at and I wanted to try it out, and then I would have a losing trade, I'd look at my trading account and I'd think, you are a total idiot. Like, you knew not to do it and you did it anyway and you lost money. Is that fun? Do you want to keep doing that? How long are you going to continue to behave this way and perform this way while your family's waiting, everybody's watching, everybody wants updates and results, and you don't know how long this is going to take. And all you're doing is adding to more pressure and more pain, not to mention that very often, and I was fortunate to continue to have more money to throw at the problem. A lot of people don't. And I don't recommend throwing a lot of money at the problem. If you can avoid it, I was just an idiot. I have to be totally honest that when I started trading, I didn't spend too much time on a demo account. I jumped straight in. I opened up a futures account. That was actually my first trading account, and I started trading futures. And then after that, I found out about Forex. And then shortly after playing around with the demo and opening up I think I was trading mini lots. I immediately just funded an account so that I could start trading standards. I didn't care and I didn't want to wait. However, losing as much money as I did definitely forced me to become much more disciplined. There was no mistaking how much money I was losing, and that in itself, knowing how much money I was losing, just saying it to myself and realizing what I was doing, it was like, you are being a total idiot. Like, that nobody should be throwing money around like that and losing it that way. You can't do that. You've got to provide some structure. So that in itself sort of stopped my behavior and straightened me up and forced me to behave and trade correctly. I'm not saying do it, but what I'm saying is all of that provided the discipline for me to create this trading strategy that I want to share with you so that you can avoid going through all of those mistakes. They're really, if you can avoid it, do it. There's no reason to go through that kind of pain. It is horrible. If you've gone through it, you know exactly what I'm talking about. You can hear it in my voice. It's not, I mean, I can go on and on about these nights and days when I was miserable. I was a wreck. You can't sleep. And Anyway, so this is not a valid continuation breakout trade. And now at this point, we're about to start a brand new week. So we're going to have to make some adjustments. So I'm going to go with that pullback low, the last one that set up just a few candles before the market closed on Friday. So now I've got a low here and a high. Now, just because I'm marking these levels off, if a 1 hour candle closes below that signal, that support low, and gives us a signal, that's not necessarily the entry. Because again, at that point, we need to take a look at the indicators. And then, of course, even if the indicators are confirming 100%, all three of them, and we have a valid signal, we still have to wait for the 3-pip entry. And it's also possible that going and waiting through all of that, even after we wait for the continuation signal candle to set up and it's confirmed 100%, we may not get a 3-pip entry and it might turn around and go right back up. Notice this indicator right here, the CCI. It's bouncing right off of that minus 100. I'm not saying right away until I have confirmation that this is going to be a bounce, but it looks like it might go right back up. And there's the possibility. I'm not calling a trade yet until I have confirmation when the market opens. But it looks like there's the possibility that price could go right back up to that price swing high, creating almost something that looks like a T2 pattern, which is about 1.4073 area. I'm not saying that it's going there yet. I'm not calling a trade yet right now. That is not what I'm saying. What I'm saying is the way things look right now and the way it failed to close with strength on that signal, I'm going to wait and see if there's maybe some confirmation that it might turn around and bounce. Even if it bounces and I get confirmation that it's going to bounce, I may not trade it back up. I might wait for it and let it continue inside of this range and then just wait for the continuation breakout trade, because that is the safest way to trade. To me, in my opinion, I see the bounce, I see the possibility, but I don't know. If I don't know how far it's going to go, then that's another thing. That's another rule of mine, is that if I can't gauge or identify a take profit level that makes sense, then I'm going to pass on it. Even though I know it's probably going to move up a little ways, I'm not going to get in and scalp it for like 3 or 4 or 7 or 9 pips. I want to target or use a specific target that's reliable and that I can repeat over and over again. And if I can't find it in here, what I might end up doing is just waiting until a 1 hour candle closes outside of this range, or just make some adjustments. It might come down and dip down and spike low, but not close below that support low, and then come back up again, and then I'll have to make another adjustment to that support level. Either way, as time goes on, I just keep making adjustments. And then if this one gets really choppy, the pound dollar, if this chart gets really choppy and it's hard to identify what's going on, then I just stop looking at it. Sometimes that'll happen, and that happened a few weeks ago. We were looking at some of the charts, and it was just a mess for about a week or so. And I even said that exactly. I said it's just a mess. I'm not going to look at it. I'm just going to box in the range, and then I'm going to come back maybe every 8 hours or so to this particular chart, the one that I was talking about a few weeks ago, and then I'll wait for a setup. And eventually it clears up. That's exactly what happens. You have to. There are situations, and it's, it could be economics, it could be political, whatever's happening here on this currency pair or whatever one we're talking about in that particular instance where it looks choppy and it's hard to gauge where it's going and there's no real direction, that is for a specific reason. Traders are reacting to whatever news they have available that's going to affect that particular currency pair. And it's just a matter of waiting for it. You're going to get the news or the catalyst, whatever it is, that will cause that breakout, and then you can safely trade the breakout, which is exactly what we got in this instance right here last week when it broke out. We just have to wait for it. You just have to be patient. And very often with my 1 hour charts, I don't really mess around with the 1 hour charts when I have them a specific page or a monitor, in my office on my desk. I have a monitor where I'm just looking at 1 hour charts, and then I'll continue to throughout the week make some adjustments to that high and low, and then mark off with those alerts and those and make sure I'm paying attention to the indicators. And I just simply wait for a continuation breakout trade. Let's take a look at the dollar Swiss. Dollar Swiss, there was that price swing high on Friday, and it closed above that high. But again, that one did not give us 100% confirmation. The Bollinger Bands were not separating the way I need them to on that signal candle right there. And you can see the CCI has quite a bit of divergence. So at this point, that was a signal candle, but it was not a confirmed continuation breakout trade, and there was no reason to go long that pair. So we're going to have to make some adjustments again to this resistance point here. And we already have last week's low. I'll pull this down and move it right down here. So that's what I'm looking at right now at this point. And it might spike up again and then pull back down again, and then I'll have to make an adjustment to that resistance. Either way, that's fine. I'll just keep making some adjustments to this boxed in range of consolidation and then just wait for the breakout. And if I don't get one next week, that's okay. I'm going to get one eventually. This doesn't mean that I'm not going to have anything to do and I'm not going to get a trade just because there's no continuation breakout trade here on these currency pairs that I've showed you so far. We've already reviewed the euro dollar, pound dollar, and the dollar Swiss. There could be Tech 1 trades, there could be T2 patterns, there could be breakouts on Bitcoin, there could be HL30s. There are other things that we can look for. So let's take a look at the dollar yen. The dollar yen's sort of choppy here. I'm going to make the adjustment here. So everything that I did on Friday, I left everything alone on this MetaTrader platform so that you could see what I'm doing when I sit down to start the beginning of a brand new week, and where I'm taking notes and the different price levels that I'm looking for to identify possible continuation breakout trades. Now I'm leaving this resistance line right in here. Actually, I should open this up. I think I'm going to open it up a click here so we can see what's going on. So I'm going to leave this here right now for the moment, but I want to review a few things here. So one of the first things I need to do when I'm looking for the appropriate range of consolidation to box in, meaning the high and the low, I want to notice the price levels. So here, that high is approximately 106.40, let's just call it. And this is 105.60. So you can see where I'm going with this. We're looking at about maybe 80 pips approximately from the high to the low, and that is sufficient to qualify for a range of consolidation that I have determined using this method since 2001 is correct for a breakout, a continuation breakout trade, a signal candle. If this range was smaller, if this range was, let's say, from that high to this low, if that range was about 55 or 60 pips, then to me, the consolidation range is relatively tight. And it's possible that when a 1 hour candle closes outside of that range, it could turn into a head fake and turn around and come back down inside of that range of consolidation and continue to bounce and go sideways. And then what that would do is just force me to make an adjustment to that new resistance, wherever it is. It needs to be at least 70 pips or higher. If it's 55 pips, don't trade it as a continuation breakout trade. Expect that if it closes above resistance, if it's 55 pips, that you're just going to have to make an adjustment to resistance, but don't trade it as a continuation breakout trade. Usually, if the ranges are too small, it will lead to a head fake, usually. Now, of course, when that happens and you see a continuation signal candle, you can also look at the indicators, and the indicators themselves may not even line up at that time with a small range of consolidation, and you would stay away from trading it anyway. But you get my point. If it's too small, or when you start looking for these ranges of consolidation, pay attention to the highs and the lows. Make sure comfortably, even 100 pips. If this low and that high, the distance was 100 pips, that's good. That's good. I want to see that. This is a 1 hour time frame. And in my opinion, it's a very reliable time frame for day trading purposes. And I need to, in most cases, when I'm trading this continuation breakout trade, I need to confirm that signal candle and I need to find out why it's breaking out. What's pushing it? What's driving it? And very often, it's economic data, very often, or the anticipation of economic data. Sometimes we actually get breakout signal candles on non-farm payrolls before, and then we trade it, and it's non-farm payrolls that pushes it straight into the take profit level. It doesn't happen every time, but it happens sometimes. Again, nothing's consistent 100% of the time, every single time. It's just the only thing we can do, again, is to control our behavior, manage our trades, pay attention to what the market's doing, not what we want it to do, and follow along. Just stay right there and keep up with it and follow along. Now let's take a look at, so I don't have a breakout here just yet on the dollar yen either. This is the dollar yen. So now let's take a look at the euro yen. The euro yen. Now we've got last week's high right here, and I have not moved that resistance point all week, last week, and then I have last week's low, and I have not moved that resistance point, and this is my range of consolidation. You can clearly see that I have a boxed in range of consolidation here on the euro yen. I would like to see, but I don't know that I'm going to see, I would like to see a 1 hour candle close outside of this range. At least at this point, that's all I've got. There might be another, consolidation range that would make more sense, and then it'll line up with economic data and I can trade it right out of that range. But for right now, with the data that I have, and again, I change my mind all the time as time passes when I get more confirmation. I have to. I have to remain flexible because I've got to follow along what the price is doing and what the market's doing. If I sit here and go, okay, no, this is it. This is all I'm going to do. And I don't make any adjustments and I don't pay attention to what's going on later on Monday, Tuesday, or Wednesday, then I could miss a perfectly good opportunity just because I sat here and left things the way they are. You've got to constantly be moving along and adjusting with what the market is doing. You've got to stay right behind it and know, at every turn, you're ready with technical analysis and understanding the fundamentals, what's driving it, what's moving it, why did it bounce, all of that, so that you can clearly get a better opportunity, a better trade. If right now everything remains exactly as we see it, and a 1 hour candle closes, let's say, above this resistance point, and it's a solid bullish candle, the indicators are separating, the Bollinger Bands are separating away from each other, there's no divergence in the CCI, MACD looks perfect, and maybe there's some economic data behind it, this continuation breakout trade on this pair, the euro yen, will pay 150 pips to the final target. I try to scale out at the first 80, but sometimes it won't even stop. It'll just keep going straight through the 80 and go straight to the 150 pip target. That doesn't happen all of the time. Remember, this is an entire week. All last week, there was no continuation breakout trade on this pair. So I just want to give you some point of reference that sometimes we get continuation breakout trades, like we got 2 of them last week on the euro dollar, and here we didn't get anything on the euro yen. We had some signals, but they didn't do anything. Like that low right there, that was a signal, and then there was divergence in the CCI, and then there was still no 3 pip entry. So there was no reason to go short the euro yen. It was a signal, but it was not confirmed as a continuation breakout trade. And that's why we stayed away from trying to short it. So right now, again, if everything remains constant and I get a breakout, this one, it's exciting to try to trade the continuation breakout trades on the euro yen when they set up, because they can pay a lot of money, but they don't set up all that often, as you can clearly see here. Pound yen. This is the pound yen. We call this the beast. We've been calling it the beast since 2007 in my first chat room that I opened to the public on the internet. Prior to that, I was trading in a instant message Yahoo group, for those of you who know my story, prior to 2007 when I opened up my chat room. Anyway, but since then, we've called this one the beast just because of the distance that it can cover. So you'll notice once again, last week, there wasn't a continuation breakout trade. We had a couple of signals that we traded for about 150 pips here on before the market closed on Friday the prior week. But from that point on, everything sort of went sideways here inside of consolidation. And this one again, it's exciting to trade the continuation breakout trade on the pound yen, because when this one hits the final target, it's a 250 pip target. Remember, this one can go further than the euro yen in most cases, and both the euro yen and the pound yen usually will cover a greater distance than the majors. And that's why it's a pretty profitable opportunity when you wait. And it's a matter of, again, with this chart, and this is the way I look at it. With this chart right here, the 1 hour time frame, pound yen. I'm going to be looking at, I've got another monitor where I have the pound yen and I have it set up so I have a 30-minute, a 1 hour, a 4 hour, and the daily time frame. All just for the pound yen. So I'm well aware of what the 4 hour and the daily are doing and things like that. But if I'm thinking to myself, this week I might get an opportunity to trade, if that's my thought, and I'm anticipating that, if I'm thinking this week I might get a chance to trade a continuation breakout trade on the pound yen, then I'm going to leave things as far as I know right now. This is my consolidation range. So I'm just waiting for it to actually develop. And then I'll review what happens if we do trade something, let's say a continuation breakout trade to the upside, if it retraces up to these levels. We've got to pay attention to some of these resistance points in here. When I scale out on the pound yen, it's the first 150 pip target. And then the final target is 250 pips. So it's a little bit different than the euro yen. The euro yen is 80 pips to the first target when I scale, and then 150 is the final target. The pound yen is 150 to the first target when I scale, and 250 is the final target. And I have all of that information in the membership area, and there's manuals and check sheets that you can download so that you know exactly when you execute one of these trades, you know where your take profit levels are. So at this point, again, I don't have a continuation breakout trade setting up. And you can see what, like, there's like 10 or 12 candles in here. This is 10 or 12 hours of just chop and did nothing towards the end and just kind of closed right about the middle of this overall trading range. So we're going to have to do another update later in the week and then take a look at these currencies to see if there's any setups. Now, the next thing we want to do is take a look at the daily time frames for a few of the majors. I want to point out a few things. And then we're going to take a look at the HL30. Now, this update is going to run quite a bit of time, and I apologize for that. There's a lot of things I really want to cover. So we're looking at the euro dollar daily time frame. And you'll notice we've got a strong bearish engulfing candle here, right at that resistance. And it's hit a couple of times. That high formed January 25th, and then it retested and stopped there February 1st, and then again the following day when it dropped, and now again last week on the 16th, on Friday. So we have to notice what's going on in here. It doesn't necessarily mean that everything's going to reverse and it's going to drop. I wouldn't, and I would look for a continuation breakout trade as well on this one, on the daily time frame. I would box in that high and that price swing low down there. So I would look for a possible continuation breakout trade, that being the low and this being the high right here. Of course, I honor and respect that high from Friday, but that's where everything sort of went sideways and nothing's closed above it yet. It's possible that price could turn around and go right back up and close above that resistance. But looking at the strength of this candle, the first thing you've got to ask yourself on a daily candle is what happened on that day to cause that to happen. It started off where it went into that resistance. And how many people tried buying when it went into that resistance like they do, right? They see price take out resistance and they don't wait for confirmation. They just buy it because it's taken out that high. And then it dropped and the whole thing collapsed and there was quite a sell-off here at this point on the euro dollar daily time frame. So again, when you see this, you've got to ask yourself, what happened? What happened there? And it's easy to go back on Friday. I mean, all you got to do is just Google it or go to economic calendars and things like that, and you'll find out what the source was. So again, do you want to trade against a strong bearish candle? And what has been the analysis since that day? Because usually after a day settles like this and there's been some news or reaction that causes this, then everybody talks about it, right? And it's all over the internet, it's all over the television, financial news stations, things like that. And then, some people will say, well, this is just going to be a temporary retracement. And then we found out later that, and then they go on and then all of a sudden you see people buying back up on the open the following day. That's a possibility. But in a situation like this, why? Do you want to go against a trade like this? Do you want to try and trade, let's say, a bounce to the upside? What would be the reason? Is there, why would you do that? Does something confirm? Is there technicals? Should you wait a little bit longer? I'm going somewhere with this. So what we're doing is we're looking at the daily time frames first, and then we're going to go look for the HL30s. Because very often when you see price, yes, this is a bearish candle, but it's also bouncing off of a pretty significant resistance level in here, and we've got to take into consideration what happened on Friday. So let's take a look at the pound dollar. The pound dollar, we've got a bearish move, but it didn't go as high and didn't retest some of those old highs from earlier in the year the way the euro dollar did. There are two different economies. There's two different things going on here. So this one, I'd be a little more reluctant and I'd wait a little while longer. And that's why when I showed you the 1 hour time frame on the pound dollar, I wasn't really too sure what to do with it. I had to make that adjustment to the support level, and I said I would be waiting a little while longer. You'll see the confusion on the 1 hour time frame, and then you can see how it looks here on the daily time frame. So here, if I was to just quickly scan through my charts, I'd be thinking to myself, I'm just going to leave this one alone. This one, I'm going to have to wait a little while. This is sort of stuck in a weird little range. I'd give this one a little more time. There's going to be another opportunity that makes more sense to me on some of these other currencies. So let's take a look at the HL30. The market's going to open up in just a few minutes, I think. Let's take a look at the HL30, euro dollar. Euro dollar 30-minute time frame. This is the HL30. So I left everything the way it was, and now we're going to do some work just like I was setting up for the start of a new week. We want to identify Friday's low, and then we want to identify Friday's high. So before we start looking for an HL30, we need to find and make sure that there was some kind of trending move on the prior day, because we're just analyzing and assessing on the HL30 because it's a short-term trade. We're only using a 20 pip stop, 20 pip target. We want to make sure that there was some kind of a trend in place and that there is likely to be some kind of bounce here off of this support level. Now, I showed you on the 1 hour time frame on the euro dollar that price swing low there on Friday was actually over here earlier in the week, a price swing high before the breakout where we got another continuation breakout trade. That's just temporary. On this time frame, it might make sense, and on this time, it might be significant. But on the larger time frames, when you start looking at the daily and you look at that strong daily bearish candle, it might blow right through all of this support or this old resistance. So you have to be prepared for that. However, again, this is some of the things that I think about when I look at the HL30. Until we get a signal anyway, do I want to trade an HL30 off of Friday's support back up when I'm staring at a daily candle that is as strong as it was, the one that I just showed you a few minutes ago? Do you want to trade against something like that? And if you have any hesitation, don't. Stay away from it. Last week and the week before, I had made some recordings and we talked about it in the chat room with coaching students that exact scenario set up a few times over the last 2 weeks where we had a strong daily candle, or maybe after the last 3 weeks, I'm sorry. We had a strong daily candle, and then we had an HL30, and it looked like it would work. And some people would say, okay, well, we're only expecting a 20 pip trade if we're going to trade the HL30. Maybe it'll just be a slight retracement, and there's enough room for us to earn that 20 pips if we trade an HL30. But when you're looking at something that's a strong candle, a strong sign, a strong signal on the daily time frames, I would recommend just passing and leaving it alone. The HL30 has its share of failed trades. The continuation breakout trade is much more profitable and much more reliable, and I have far fewer failed trades with the continuation breakout trade. The HL30, I'm constantly having to work for and look at the larger time frames to minimize getting into some of these potential trades that could potentially fail. They could potentially fail. So you've got to be aware of that. You've got to be careful. It is a small trade. It's 20 pip stop, 20 pip target. So if you experience a loss, it's no big deal. You can earn it back on the next trade. Yeah, that's true. But I'm always trying to be 100% right on my trades. I know that that's not possible, but that's my goal. And that's what keeps me focused. That's what keeps me in line. And it should be yours too. You should be looking for, first of all, using a trading system that's proven and that is profitable. And it will work. None of this 50-50 stuff. I know that people talk about that. They still talk about it. I still read about it. I read an article about it this weekend, and I read books about it. You can have 50% losing, 50% winning, but if you keep if you keep your winning trades, let them run, and your losing trades, you cut them off quickly, then you're still going to make money. And again, it goes back to those concepts. These are vague concepts. When you don't have a trading system in place, what the hell does it mean to you if somebody says, let your winners run and cut off your losers quickly? These are vague concepts. I got so mad when I kept reading that because I didn't have a system in place, so it didn't matter anyway. Like, how am I going to let my winners go and continue when I don't even know where to take profits, right? That's what I was thinking. So you got to be careful. You've got to be looking for the opportunity to find the best trades where the advantage is more in your favor than at any other time. And you'll know it. It'll make sense to you because you understand it. You've confirmed it. Everything is 100% exactly as you know it to be. So, enough of that. Just be careful. Again, there might be an opportunity to trade an HL30. I don't have an HL30 signal candle here yet. Again, you want to make sure that you're confirming it with the indicators properly. You want to make sure that you're using the right signal candles. Make sure that it goes down into the 10 pip range. I have all of the details and some checklists in the members area. You can print that off. It's a checklist that, so when you see an HL30, you can just go through 1, 2, 3, and you know you've got it confirmed, and then you can execute. But again, looking at that daily time frame, be careful. Please be very, very careful trading against something like that. Sometimes it works, sometimes it doesn't, but be very careful. There might be a better HL30 trading opportunity somewhere else. So let's continue. Let's take a look at the pound dollar. This is the pound dollar 30 minute. So we're going to go down here. And then we're going to go with resistance. This is Friday's high. So sometimes, this is something else that will happen with the HL30. Sometimes, we've got that little trending move here and it's bouncing around. And it might give me something that looks like a Tech 1 trade or an HL30, something like that, but it's not confirmed. So I stay away from it and it bounces around. And then it might go back up and retest resistance through Sunday and Monday up here at Friday's high, go into the 10 pip range, and then print an HL30 later during the New York session. And then I can sell it. So that is a possibility. Just because it doesn't set up right away after the first couple of hours of the start of the new day doesn't mean you're not going to get an HL30. It's possible that you could get an HL30 in here. So just be aware of that. It does happen. So to give you an example, sometimes with non-farm payrolls, I will be looking for a trade, right? I'm boxing in ranges of consolidation on the 1 hour. I'm looking for possible breakouts. You never know what's going to happen with non-farm payrolls. And I'm also looking at the 30-minute time frames. And sometimes non-farm payrolls, the reaction, it stays within the previous day, Thursday's trading range. And I don't get a signal as a breakout, and I still don't get an HL30 until after 8:30 New York time when non-farm payrolls is released. So I'm just going to give you an example of how it moves and how long it could actually take to wait for an HL30. And then the reaction from 8:30 to 9, sometimes it'll move up into hit the 10 pip range resistance, and then it stops. And then from 9 to 9:30, it comes back down and then prints that HL30 to sell. And then I simply get in at 9:30 if it's a confirmed HL30 because I know exactly what it did. And I know, and I've got plenty of time to look at non-farm payrolls, and I can see that the news wasn't enough to really justify a big move. So I can't expect it to go very far anyway. And I clearly have an HL30 and I sell it for 20 pips. And that's it. And I'm done. And it doesn't happen every non-farm payrolls, but on occasion, that's exactly all I get. And I'm okay with that. That's cool. That's fine. I'm good with that. That's exactly what I want. I want something that's reliable, something that's consistent. I don't have to worry about, and you don't have to worry about jumping in the heat of the moment, trying to get a fill when you hear the news, hoping that there's no revisions. It's such a easy, stress-free way of trading it. But you don't always get HL30s with non-farm payrolls. You just have to be prepared for it and set your charts up and watch and wait for it. That's just that's all you can do. So here, again, if we don't get a solid confirmed signal, it's possible that we might be able to trade it off of an HL30 from resistance, and that might make more sense. But that would, of course, be later on in the trading day. So I'm going to go over here to dollar Swiss. Dollar Swiss, Friday's low. Dollar Swiss, Friday's high. So at this point, we've got a high here at 92.87. I'm going to open this up. 92.87 is the high. And that means in order for us to find possible HL30, price needs to go up to at least 10 pips below Friday's high, but it cannot exceed 10 pips above Friday's high. So I'll draw these in for you for those of you who are unfamiliar with this. 92.87, so price has to come up to at least 77. Right here, right about there. Price needs to go up to at least 92.77, but it cannot exceed 97, right up here. So there, I call this my 10 pip range, but effectively, technically, from that high to that low, it's 20 pips. But I just call it a 10 pip range because I'm looking at Friday's high. I'm looking at the actual high. So it needs to go up to at least 97 and then wait for the reversal and then check the CCI indicator. That candle so far in the open has gone up as high as 78. So it has hit the 10 pip range. So we don't have a close completed signal candle just yet. I wouldn't sell it just yet. I still think it'll flip around and go back up one more time. Because remember, and this is the key, you have to go back, and when you see these signals, I do the same thing with the continuation breakout trade. On Friday, we had a continuation signal candle above resistance on the 1 hour time frame. Remember that? I showed you that earlier on the dollar Swiss on the 1 hour time frame. But the indicators were not confirming correctly. They didn't give me solid 100% confirmation to go long this pair, but there was a signal. Knowing that that happened prior to this, if this one sets up with an HL30, then I would go with whatever happened here on Friday, thinking that I'm going to wait. So if I do see an HL30 and it looks good, I'm still going to wait for a possible retracement and a retest and leave it alone. I won't get in on the entry of that signal candle. Now that's a conservative approach. That means that it might work and take off without me and drop 20 pips, maybe even 40 pips, and I won't even get it. But I'm okay with that. Because now what I'm talking about is I have somewhat conflicting signals here and I want to be careful. It is Monday. It's also going to be a bank holiday in the United States. So it could be lighter trading volumes. Things could be not as reliable as far as price movement. So I want to be aware of that. I know that there was a continuation signal candle on Friday, but it didn't give me 100% confirmation. So I don't know that it's going to pull back and then go back up and close above Friday's high and then print another continuation signal candle, because there is a move here going on. I know that there needs to be a trend anyway, but this isn't necessarily a bounce off of a significant resistance. This could be just a move, the breakout to the upside, and then a pullback, and then it could turn around and flip right back up and test that high. So again, if you see an HL30, be careful. Don't sell it right away, even if it's confirmed and you get the close completed candle. Wait. I would wait and see if there's a retest and let that happen. Let that go on without you being in it. Don't try it. Don't test it. Because remember what happened on Friday. That's an area or a situation where I would be more concerned about a possible HL30 failing. Remembering what I see on the 1 hour time frame. So I talk about the HL30 that you could do really well just executing the HL30 and not trading, for example, the continuation breakout trade. Some people don't want to use that trade because it's got a 55 pip stop loss. So they like the HL30 because there's a 20 pip stop, 20 pip target. It's easy. Everybody should be able to afford that if you're trading. 20 pip stop. Everybody should be able to afford that. But you're constantly looking for areas where it could potentially fail. You want to improve your chances of having winning trades. So that means you're going to have to do a little more research. You're going to have to start looking at the 1 hour chart. You're going to have to start looking at the 4 hour chart and the daily chart. Be aware. So it was like the euro dollar when I said that there was a strong bearish candle. Do you really want to trade against that on an HL30? Do you really want to trade that and think it's going to go up 20 points? Sometimes it doesn't. So you got to be aware of that. So keep an eye on the 4 hour, keep an eye on the daily, even though you're executing a trade here on the 30-minute chart. You normally can do really well even if you just ignore all the other time frames. I've got some students that do that. There are some weeks when everything works out perfect with every HL30 and you can just execute them and you won't have any losing trades. But that's not going to stay that way. It's not going to keep doing the same thing over and over again. It won't. And eventually, you're going to have to start doing more, or you're going to have to work a little harder. Things get easy sometimes. It happens for me. Things get really easy, and I find continuation breakout trades, and I don't have to worry about them at all. And then other times, market gets really weird and really choppy, and it gets really volatile. There's all kinds of unexplained, price movements. It's hard to find and dig and find out the sources as to why price is moving the way it is. So I've got to work a little harder on some weeks, some days, to find the source of my confirmation, to look for confirmation. That's just the way it goes. It's going to, it's almost like you're going to fall into a false sense of security sometimes if it gets easy. If you just happen to be picking up some of these techniques and you're just executing, you're just going, wow, this is really easy. And then all of a sudden there's going to be that day where everything just goes opposite and you're like not able to understand that. Prepare for that. And that's when you're going to have to dig in and you're going to have to start doing a little more research. Technically, if you're looking for, to research and to confirm, look at those 4 hours and those daily time frames. It's really going to help you avoid, some of these possible failed trades, because you'll realize that at that point that you're trading against, a big signal that you wouldn't know unless you looked at it. You wouldn't be able to see it here on the 30-minute time frame. You got to stop and take a look at it. You need to be aware of the overall bigger picture. And then there's times when, and I do it, when I'm just not too sure. I look at the daily, I look at the 4 hour, I look at the 1 hour, I see the 30-minute, and I think, there's just something that doesn't look right. Now, when I first used to think that, I would go ahead and take the trade anyway. That was years ago. I've done that so many times, and I've lost so much money as a result of doing that, that I simply just couldn't take the pain anymore. And I learned by constant exposure to it, in that being in that situation, it was just a matter of training myself to stop that behavior. And now I can just walk away. I know that I'm going to do better and I'm going to make more money and I'm going to lose less if I just stay away from the ones I don't understand. Even if they work, I use it as an opportunity to try and figure out what happened. And I just smile, right? I mean, I don't look at it as, damn, that was a lost opportunity. I should have taken that. I used to look at things that way. But that was because I was down a lot of money and I had a lot of work to do to get back the money that I had lost. And you may be in that situation, but if you continue to trade things that you don't understand, it's going to be harder on you. You're going to make it worse and you're going to feel worse. You're not going to feel successful. Like, you're not going to feel good about what you're doing. Trading is a wonderful opportunity. It should make you feel good. You become humble. You stop like sort of talking about it. Like in the beginning, I would talk about it and I couldn't stop talking about it. And then after a while, I just settled in, right? I settled in and I'm comfortable with what I do and I don't need to talk about it anymore. It's routine. I like the discipline that it's just me and the market. That's it. I like the discipline and I like the study, the analysis. It's never really always going to be the same thing whenever I execute a trade, but the structure of what I do and how I expect it to turn out is the same. It's the same basic market patterns that all correlate to technical levels, psychological behavior, reaction, the trader psychology behind it, momentum, sentiment, all of that combined is what I'm looking at. I can see it in the charts, and I'm sure you can too. And that to me is really the excitement about it all. And the money just is. And I know you've probably heard this before, and it sounds kind of stupid, if you're still struggling, because when I heard it, I thought the same thing. I thought, hey, you guys are all saying the same thing. But money is a gauge, of course. But it's a gauge when you've got a successful trading system and you're starting to make money consistently, right? And then you use it as a gauge. Don't obviously use it as a gauge right now. Right now, if you're still struggling, your focus is to control your behavior, control your surroundings, get yourself, calm down. Don't jump in when you've got to find the source of power and control, that self-control, that discipline to stop yourself from doing whatever negative behavior you're executing that's causing all of the losses. You have to find that's your primary focus right now, if that's what you're doing. And that I had to go through that. Like I had to go through that part too, in addition to coming up with a solid trading system. It was a weird experience. Like I could never compare anything that I've ever gone through in life to what I went through in my trading career. Like I had to understand price. Like I didn't know what the hell I was looking at. Why was price moving? What it causes all this? Like the first time you ever show a chart or your screens to your wife, your husband, your boyfriend, girlfriend, your friend, your kids, they look at it and go, "Whoa, whoa, what is all this?" They don't know what is going on there, and that's how it is. And you're trying to do all that at the same time, learning how to control your behavior about the fear of losing money, and that's a serious thing. You've got your family's money on the line, and you keep doing the same thing over and over again. And so many people will continue to do that until it's just all gone. They just don't find the source of power. They don't find the power, the self control. They just keep doing it out of anger and shame and fear. You can't. It doesn't work like that. You can't trade from that. Anger and all of that. It is an energy, but you've got to learn to control the energy. You've got to learn to channel that energy. Old punk rock song. Anger is an energy. Some of you probably know exactly what I'm talking about, but it is. I think about it all the time, and I used to think about it when I first started training. My anger, I would get so mad, and why can't I control this? But it is an energy that you need to learn to control.